This video will provide a summary of our applied business simulation trade.
Our team members are as follows.
We will be going through the objectives, strategies, and the companies selected. We are risk-averse investors seeking to make the highest returns at the lowest risk. To achieve our objective, we plan to use fundamental analysis and technical analysis. To determine which stocks to invest in, we use the top-down approach by first looking at the sector, industry, and then the specific company. The tools we use for technical analysis are the MACD and Bollinger Bands. We will focus on the 5 stocks that we have invested in: Intel, Apple, DXC Technology, OCBC Bank, and McDonald's. In the semiconductor industry, companies rely on their ability to produce smaller, faster, and cheaper transistors than competitors. The industry's expected revenue is $440 billion for the year and expected to grow to $524 billion by 2023. Big market players include Samsung, Intel, and SK Hynix. In May 2019, Intel complied with US administration to stop electronic exports to Huawei. Although that news has hurt Intel's growth, its year-on-year actually performed better than the industry by almost double. This is a good time to buy into an undervalued stock. Using MACD, we bought the stock when there was a possible bullish crossover as well as reaching the bottom of the Bollinger Band. We sold the stock when there was a possible bearish crossover from a sudden decline in the price.
For my part, I'm going to talk about the communication equipment industry. With digitization, smartphones are being an essential to many individuals for various work functions such as work-related and personal usage. In America, 2/3 of the Americans own a smartphone. As for Apple Company, a stock that I've chosen, has revenue growth of 49.3% and net profit growth of 50.6%. For technical analysis, we bought the stocks on 5th June as the MACD line and signal line is converging, believing that there is a bullish crossover. We sold the stock on 7th June as the MACD line and signal line touches each other, indicating a bullish crossover.
DXC Technology is an end-to-end IT services company which provides information technology services and solutions primarily in North America, Europe, Asia, and Australia. Following the acquisition of Luxoft Holding, investors remain bullish on its growth story and expect to see improving results from the next few quarters ahead. As the MACD line and signal line were both moving towards each other, this suggests a bullish crossover. Indicator values of Williams percent range of 10 days and 50 days also show that the stock is oversold below -80 at the swing low. Thus, the team concluded with a buy decision. Based on stochastics, DXC cuts at above 80, indicating an overbought condition. This is supported by RSI where DXC is approaching the overbought region of more than 70%. Thus, the team concluded with a sell decision to lock in profits.
Experts are predicting slower loan growth of 0.5% in 2019, mainly due to the ongoing US-China trade tension. The trade war reduced the number of offshore Chinese investments, halting economic opportunities in Singapore, especially in the financial sector. OCBC has a strong financial performance throughout the past 5 years, with revenue and profit growth of 16% and 15% respectively. OCBC stock is at a relative bargain compared to its competitors, as OCBC has the lowest PE ratio against industry powerhouses. On 7 June 2019, we decided to buy OCBC stocks as the MACD line hinted a bullish crossover. Conversely, we decided to sell the stocks on 8 July 2019 and the MACD line converged below the signal line.
McDonald's is an American-owned global fast food restaurant with a brand value of $126 billion and has a yearly net income increase of 3, 10, and 14% for the past 3 years. McDonald's 10-year average stock returns of 12.2% is higher than the benchmark New York Stock Exchange of 7.7%, indicating that McDonald's stock returns is outperforming the market. McDonald's current PE ratio of 27.1 is significantly higher than its 10-year average PE ratio of 17.6, suggesting that investors are confident in McDonald's ability to generate higher growth. The team decided to buy in as the MACD line crossed over the signal line, indicating a buy signal and higher highs were appearing, and decided to sell as the price exceeded the upper Bollinger Bands, suggesting that the stock is overbought, and as the MACD line started to smoothen out, indicating a slowdown in price increase.
The team learned that the US-China trade war had an adverse effect on many countries, the importance of diversification to reduce portfolio risk, the importance of using fundamental and technical analysis to achieve maximum returns, stock market is unpredictable even with sound analysis. Lastly, we learn how to use the Saxo Trader trading platform.